Hi everybody, welcome to the Baguette Investor channel for a new video. So we're going to do the second weekly review of the year. I'm just gonna input my trading journal. A red week last week, very small percentage volatility to be taken into account on stocks, and also crypto that keeps moving down. So not really an interesting week in terms of the profits or losses that I made because, well, nothing much happening. And what I really want to talk about is crypto is not that interesting, but I really want to share my views on stocks. I think I can really provide you some value with what I learned to see in stocks. So first we're going to go very quickly on crypto because there is nothing important to say really. We are in this big range on either on Bitcoin, on Ethereum. We're also in this big range that has no clear trend. If you look at the total, you can see that there is nothing obvious. This is a directional market when the market goes in a straight direction, and this is a range market when the market does not have any direction. Breakout trading in this kind of market is going to be very successful. Breakout trading in these kind of markets is going to be not successful and very, very unsuccessful. So what's the point trading heavy in this market? There's no point. I trade very small positions, risking 0.1% per trade just to have fun and to keep me busy, because otherwise I like to go into my accounts and do some stuff. It's not how you're going to make your performance in the year. So I'm waiting for the big moment. We're seeing some heavy selling pressure right now. I have a small short open on Bitcoin. You can see that we're still in a range. This really looks like a sinus function. You see, we could see something like that. This is not strong downtrend, so no point going heavy short or heavy long. I'm just playing some trades just to have fun. Ethereum is the same. We failed the breakout, and you can see that we are now correcting, maintaining a stronger bearish trend, because you see the trend it's getting much stronger. If we can't maintain these levels and make new highs, and we establish a very strong bearish trend, this is not going to be good. We have to maintain these levels, around there. This is really where people are going to print the demand zone, where people are going to be willing to buy. But we're still far from there, so I don't see anything. I don't have anything to talk about. What I have something to talk about is stock market. Stock market is becoming very, very interesting. The S&P 500 is not enough if you want to understand the whole picture of the stock market. The S&P 500 is a market weight index, and 50% of the S&P 500 is composed in like 10 to 15 stocks. So the S&P 500 is going down, but it's still in a very, very strong uptrend. And you can see this uptrend is absolutely strong because we have not had a negative moving average cross since the COVID crash. So it would be completely normal in the next month to have a very strong crash that would wipe out many people, because it just happens. You see, if you look at the history of the S&P 500, you see corrections that happen a lot of times, and this is completely healthy for the market. So I'm waiting for more of a correction. What is happening? We're going to look at the components of the indexes. You can take the indexes into two classes of stocks. The first one being growth stocks, and the second one being value stocks. And at a glance of these indexes, you're going to see something much different. The best performing assets of 2020 to 2021 were growth stocks. You can see that if you compare the bounce since the COVID crash, growth stocks are performing 141%. If you compare value stocks, you're going to see a much lower percentage gain of only 95%. It's still very good, but it's not as much as growth stocks. But right now, what you can see is that value stocks have been slightly ranging since May 21 and are now holding pretty good. If you look at growth stocks, they have been going up since May 21, right there, but they are now seeing some selling pressure. The question you would be asking me is, why is there selling pressure on growth stocks but less selling pressure on value stocks? Well, because one of the main reason people are freaking out and selling their growth stocks is because of the interest rates rising. When interest rates rise, it's usually because of inflation, and stocks that get hit by inflation are growth stocks that need a lot of debt to keep growing. So you can clearly see this by looking at the growth stocks being hit. Of course, this is daily pattern. This is a daily top market. This has nothing to do with the whole monthly trend that is set up right there. If you look at this, a daily breakout does not question this, but this is the really important level that you should be looking at in terms of correct market correction. And if we keep confirming a new downtrend, we are going to witness a new correction. What I'm waiting for is a negative moving average cross that would happen and would confirm a much deeper correction. But this is really something to pay attention to. You can see that the moment, if you want to be short, well, you might as well start thinking and start looking at the short opportunities in the growth stocks. And if you want to be long, you want to be looking at the long opportunities in the value stocks when they will bounce, if they do. If you want to do that and find the inflation assets that have good configurations, I released a video, was last week, that helps you to do that. So feel free to check out, go into the channel page. You just click in the channel page below and you will see the video. It's in the last videos. So this is something you would be very, very keen to look at. I just tell myself that I don't really talk about the components of these indexes. Growth stocks are mostly tech stocks, big tech companies and medium tech companies, and value stocks are financials, materials, and minerals stocks. So in financials, you would have, for example, Berkshire Hathaway for the value stocks, and for the growth stocks, you would have, for example, Apple and Amazon. I believe Amazon is taking quite a hit today. Yeah, it's being hit quite heavily, and if we confirm this as a market top, this would be a strong top signal because this is a weekly, monthly pattern. So yeah, if we see some rising rates, this would apply very hard for growth stocks. So keep an eye on this. You could take a look at small caps growth. That's another thing that I really want you to look at. If you invest in small caps, it's really not the time to buy small caps. Really very, very bad decision if you bought small caps right now. Small caps growth. I'm talking about growth small caps, not value ones. Small ones. Mind my words. You can see that since February 21, growth small caps have not done anything. They have just been in a range market that is very clear to you, I hope. And right now, what is happening is that last week we broke down, and now we're confirming the breakdown. And if you look at the volume, you can see there is massive volume right there, massive selling volume. People are cutting their positions. And what is causing these huge drops is when big players, big institutions, the ones that have very big positions are cashing out their position. And you would be very smart, like if the people who bought all the way down here, that they would be cashing out their position all the way here. That would make total sense. If you bought in the place right there, it's right now you're thinking taking profits. When you're in the range right now, you might be thinking staying in the trade because you don't know if the market's going to go up again. But when you see a correction confirming, you might be tempted to take off some of the trades. So you can see we are having a very red day for small caps. But if you look at Russell 2000 value, you can see that the drop is very, very different. We are not as bearish. Of course, there is a very high probability that we come and check this line, but we are far from the support. So it's still better to look at value than growth. I'm not taking any trades today because all the markets are going quite down, but this is something that you really need to keep in mind. The number of stocks above their 200-day moving average keeps going down, so we remain in a weak market, but a big correction would be very healthy and trigger something new. If you look at small caps as a whole, I'm really waiting for this breakdown to happen. If we happen to have a breakdown, I'll be very happy because it will mean finally a correction. Because what I hate are range markets, but when the markets are directional, I am much better at this. So be really careful in the next weeks. We might have some high volatility after a huge volatility contraction. If we take a look at Bollinger Bands, Yeah, the volatility, the Bollinger Bands are now already shrunk because there was an attempt to break up, but the breakout didn't happen. So we might have an attempt to break down. If the breakdown happens and works, this is going to be hard for everybody. And if you look at, I'm gonna just check these to finish the videos. Microsoft is breaking down of its top market pattern and on the daily. Google is also looking quite toppy. Amazon, we're seeing some bearish momentum. Tesla, nothing to say. Facebook, nothing to say. Nvidia breaking down too. Very dangerous breakout. Adobe also breaking down. Netflix also in downtrend. Salesforce also in downtrend. Oracle, nothing to say. Accenture, very strong deleveraging. This was a climax run. This was a bubble figure where the trend is going much and more faster and faster. And at some point, the trend can't keep going because there are not any more buyers. And you can look at this volume right there. Look at this selling volume. This is people taking massive profits onto people buying the top. So if you are buying Accenture over there, you are probably buying the top of the market at the moment. Of course, in the next years, this might not be the top, but in the next month and weeks, there is a very high probability that we are seeing an end to this massive trend because of the high selling volume. And the last one we're going to take a look is Avgo, which has the same pattern with big selling pressure. And if you want to look at opposite kind of price action, you can take a look at Berkshire Hathaway, that it has, on the other hand, buying volume, and people are entering Berkshire Hathaway and this is no longer the time to invest because, well, you might have the strong pullback, but just to give you an idea of how different on the same period two asset classes can have different outcomes. We are coming into the inflation narrative. We are coming into rising rates. We're coming into growth stocks maybe being hit. So really take a look at the interest rates. If the interest rates keep rising, if inflation keeps rising, they will be destroying growth stocks. And on the other hand, if interest rates stop going up and inflation calms down and maybe it was transitory, everything is going to go back to growth stocks and growth stocks will resume their uptrend. We'll see that in the next weeks. So yeah, hope you are having fun with this interesting analysis. I'm not touching anything today. And maybe this week this is going to be the week where everybody will sell their shit and make their mind after selling. So I'm waiting for a consolidation and an impulsion on stocks that I want. Maybe I'll open some shorts. I don't know. I'm not very good at short selling stocks. So I'm staying out. When you don't know, it's better to stay out rather than trying things, or I just try things with very small positions. That's it. Thank you for watching. See you in the next video. Have a nice week. Goodbye.